Hello. Today I want to tell you about 3 foolproof crypto investment strategies that I've been using successfully for only a few minutes a month. They are simple and effective strategies, especially for beginners. But first, I want to give you the disclaimer that I am not a financial advisor. I'm just giving you the results of my years of research, training, and successful resulting strategies. Your experience may be different from mine, and there's no guarantee you're going to make any money. All I ask is that you stick around to the end of the video, because aside from getting great value in this video, I have a little gift for you, which I think you're going to want to have. And of course, if you're finding value in this video, give me a like and subscribe to my channel, and I'll continue to give you more successful actions that I've done in the past. Now, the strategies I'm about to give you in this video are long-term strategies. Although it's possible to make good short-term gains, these are not short-term strategies or get-rich-quick schemes. Having said that, let's jump right into it. Foolproof investment strategy number 1, dollar cost averaging. The strategy of dollar cost averaging is very simple. All you do is invest a fixed dollar amount at a fixed length of time. A fixed dollar amount could be, let's say, $100. And a fixed length of time could be something like every week, every month, every 3 months, whatever you decide. But it has to be a fixed length of time. The strategy here is, as the price of the coin goes up, your $100 is buying less coins. And conversely, as the price is going down, your $100 is buying more coins. It's as simple as that. So the result is an average price for the coin you're paying over the long term. Let me show you a very simple graph of how this works. This is a graph showing the price change of a coin over time. In this example, I am investing $100 every month. That is my fixed dollar amount and fixed length of time. All the way to the left, in month number 1, you'll notice my $100 bought 20 coins as the price of each coin was $5. In month number 2, you'll notice the price of the coin went up to $6. So my $100 only bought 16.67 coins. Yes, you can buy partial coins. And in month number 3, my $100 bought even less coins, 14.29, because the coin price went up to $7 per coin. Now look at months numbers 5 and 8, because the price of the coin on those months was $4.50. Now I was able to buy 22.22 coins. And at the end of 9 months, I added up how much money I invested in total, which was $900, and then added up all the coins I bought, which was 157.45 coins. And if I do the simple math of 900 divided by 157.45, I come up with an average price of $5.72 per coin. Got that? Okay, good. All right, I hope all that made sense. And if you have any questions, please leave them in the comments below. Now, the basic philosophy of investing is buy low and sell high. The one issue I have with dollar cost averaging is you never sell. Now, this is fine for the very long term, like your retirement account. But even still, why shouldn't you maximize your profits by protecting your gains? Keep in mind that to recover from a 50% loss, you have to make a 100% gain. That's important. For example, if you've invested $1,000 in a particular coin and it fell by 50%, now worth $500, you'd have to make a 100% gain just to break even. So that $500 needs to double in order to make that $1,000 again, just to break even. Foolproof investment strategy number 2. Asset allocation. The strategy here is to allocate some of your initial investment money into cryptos and some in cash. And then at a fixed length of time, because the values of your cryptos are changing, you readjust your allocation back to the original percentages. Here's an example. Now, arbitrarily, I picked my percentages to be 75% crypto and 25% cash. If you want to be a little more conservative, you can make that ratio of 50% crypto and 50% cash. The ratio is entirely up to you and dependent on how much you can afford to risk. The higher the crypto allocation, the more volatile and riskier your investment becomes. But once you decide the ratio, you should keep it consistent. So in this example, you'll see that I have an initial investment of $1,000. I have invested 75% or $750 into my crypto coin. The remaining 25% or $250 I left in cash. The fixed time period will be 1 month. So once a month, I will check my allocation and readjust it back to the 75%-25% ratio if needed. Now let's say 1 month from my initial investment, I'll check my allocation and my crypto coin value grew to $1,250. Now, as you can see, the ratio has changed from my original allocation. So what I need to do here is move or sell a certain amount of crypto so that my ratio once again becomes 75%-25%. The amount I need to sell to rebalance my allocation is $125. How did I come up with that amount? Here's a simple calculation. Since my portfolio value grew to $1,500, that is the amount of crypto plus cash I have. Here's how I calculated my 75%-25% ratio. For the crypto balance to be 75% of the $1,500 total, we need to multiply the $1,500 by 0.75. That value becomes $1,125. The current value is $1,250. So the difference between $1,250 and $1,125 is the $125. So that is the amount I need to sell and move to cash. So now, as you can see, my portfolio is rebalanced to the 75-25% ratio. In this example, I am essentially selling as the value of the coin is going up. But notice also the readjustment didn't tell me to sell all of my profit, only some. My original crypto investment, if you remember, was $750. So I'm taking some profit, but also allowing some of the profit to continue to work for me. Now let's say in the following month I check again, and my crypto coin value went down to $700. This means now we are going to have to move, or actually buy, more crypto to rebalance the ratio. The amount of crypto we have to buy is $100, and here is the calculation. So as my total portfolio value is now $1,075, I need to multiply that by 0.75 to determine my new crypto allocation. As you can see, the new crypto allocation needs to be $806.25. For simplicity, I'm going to just round that off to $800. Since there is $700 currently in my crypto allocation, I need to buy $100 worth of crypto coin to bring my crypto allocation back up to 75% again. Now, as you can see, my ratio is back to 75%-25%, and I'm still making some money in this volatility. And I'm also somewhat protected from any massive downswing because I have some of my portfolio in cash. The bigger you make your cash portion of your ratio, the more you are protected from a massive downswing, but it also limits the extent of your upswing. It's all a matter of what you're comfortable with. Foolproof investment strategy number 3, the automatic investment machine, or AIM for short. One day, a while back, while looking through the investment books in a bookstore, yes, I used to do that, I found this book that I had to have because of the title. And the title was How to Make $1 Million in the Stock Market by Robert Lucello. Incidentally, you can find that book on Amazon, and if you click my link below, I get a little commission, but that's up to you. Anyway, I thought the title of the book was so corny that I had to buy it. But after reading and testing out the strategy, I was amazed at the performance and the simplicity of it. All I did at the end of the month was plug my coin value into this formula, and not only did it tell me what to buy or what to sell, it told me exactly how much to buy or how much to sell. So as the market was going up, I was selling, and as the market was going down, I was buying. It's sort of a very aggressive form of dollar cost averaging. It literally took me about 15 minutes per month by the time I plugged in my coin value into the formula and then I bought or sold whatever it told me to. So to make my life easy, I took these formulas and put them into a Google Sheet. I also decided to change my timing to once a week because of the crypto market volatility. Then every week, I just plugged my crypto coin value into the spreadsheet. It spits out the number to either buy or sell, just the way I like it. Simple, easy, and quick. And if you're good boys and girls, I'm going to demonstrate my Google Sheet to you right now. Just kidding. I'm going to do it anyway. But to save you all the brain twisting, I'm not going to go into the mechanics and formulas of it because he explains it so very well in the book. I strongly recommend you buy and read the book and test it out for yourself. It's a very easy read, maybe about 100 pages or so. Like I said, the link's down below. All right, so let's start the demonstration. Now, the way this works is you take 2/3 of the money you want to invest and you buy a few crypto coins. I usually don't have any more than 5 or 6 crypto coins because the strategy works on volatility. So the more different crypto coins you buy, the less volatility you're going to have. But sometimes, I don't know, with this crypto market, it's all over the place, so it probably doesn't even matter. But anyway, that's what I do, stick to 5 or 6 crypto coins. Now, the other third of my money, I leave in cash. This is because when the market goes down, I'm going to need that cash to buy. As an aside, I usually keep my cash with the crypto broker, exchange, whatever you want to call it, because sometimes transferring from your bank account to the exchange or the broker takes some time, sometimes even days, and you'll miss your opportunity. In choosing which crypto coins to invest in, I usually stick to the top 25 crypto coins that have a market capitalization of $10 billion. Yes, billion with a B. Market capitalization, or market cap as you see it, is simply the number of outstanding coins of a particular coin multiplied by its price. So if there are 1 million coins available for a particular crypto coin, and each coin price is $10, then the market capitalization value is 10 million. Having said all that, let's see an example. Let's say I have $1,500 available to invest. I'm going to take 2/3 or $1,000 to buy my coins, and the remaining $500 I'll keep in cash. So I enter $1,000 right here in the investment value column, and the remaining $500 I'm going to put here in cash. Okay, and in this column, portfolio control, you're going to put $1,000 because that's the initial investment I made in the investment value column. Okay, that's all you have to do to set it up. That's it. Now, when the following week came along, I simply entered the date, looked up the current value of my crypto coins, plugged it into the investment value column, and pressed my fill button. In this example, I made my investment value $1,300, meaning I made $300 over my initial investment. The key column to watch here is the market order column. This column tells me exactly what to do. The red parentheses tells me how much to sell. If it were a number in black without the parentheses, that would tell me how much to buy, which I'll show you. So what I do now in this example is actually sell $170 worth of crypto coin. And that's all I do for the week. Now in the following week, let's say my total coin value declined to $1,000. So again, I plug in my date, I enter $1,000 into the investment value column and press the fill button, and boom. This time my market order column is now black, which is telling me to buy $100 worth of coin. And so I do. And that's really all there is to it. Week by week, I enter in my investment value and buy or sell what it tells me. And that's it. Pretty cool, huh? Okay, as promised earlier, here's your free gift. Click the link below and I'll send you the Google Sheet I just demonstrated to you so you can check it out for yourself. All right, I hope you got a lot out of this. If you did, give me a like, subscribe to my channel, and I'll continue to give you more successful actions that I've been doing. And of course, by all means, share this with your friends. All right? Thanks for joining me.